Okay, now we have the 2-2 work together. And in this one, we're going to, once again, go to our T charts. The first thing we need to do is we're going to label our T charts with account titles. And then we're going to enter which side of the T chart the transaction is going to affect. Now remember, rule number 1 from the 2-1 working papers, the left side is always the debit side. The right side is always the credit side. So now it's just a matter of remembering which side goes with the increase and decrease, and which types of accounts count as an asset, which accounts have value that the business owns, and which types of accounts are liabilities and owner's equity. So we've got our information up here. We've got our list of account titles. And now we have on this other tab, transactions, and we're going to put the money amounts in the appropriate side for the accounts. So we'll start with this first one on March 1st. Received cash from owner as an investment. So something to remember from 1-3, 1-2 working papers. Each transaction affects 2 accounts. So this transaction is going to affect 2 accounts. Remember we had the pluses and the minus signs. Those went into 2 different accounts. We're going to do the same thing here. It's just with money. So received cash from owner as investment. So this is going to affect 2 accounts. So let's click over to the account titles. So the first account that it's going to affect, cash. And then the other account, the capital account, the owner's capital account. So received cash from owner as investment. So we have our drop-down menu, and if you want to go ahead and read the instructions, this Jensen Cleaning Service uses the listed accounts. Some of the accounts will be explained in Lesson 2-3. Prepare 2 accounts for each transaction. Like I said, each transaction affects 2 accounts. Select the account title for the accounts that are going to be affected, and enter the amounts either on the debit or credit side. So we'll start with March 1st. That was a cash, was our first account. If you go back to the transaction, that's received cash. So the business received cash, so cash is going to increase. So remember with 2-1, we had the increases for an asset goes on the left side. So we're going to put $4,000 here. We don't need the dollar sign because this is the side where the increase is at. Remember, the debit and credit is always going to be the same. And the increases in asset goes on the debit side. So then our other account, the owner's capital account, and that's on that right side of the accounting equation. So the increase in accounts on the right side of the accounting equation go on the credit side. That gets us to our next transaction. Paid cash for supplies, $95. So 2 accounts, cash and supplies. So we'll go down here, check our drop down menu. Cash isn't available on here, but supplies is, so we'll click on that title. So an increase, or supplies is an asset. So the increase in asset goes on the left side under debit. So we'll put a $95 there. And then cash was paid out, so cash decreases. It goes on the right side. That gets us to our next transaction. Bought supplies on account from Supply Depot for $120. So once again, 2 accounts are affected. So let's see which one's listed here in the first drop-down menu. Okay, supplies. So once again, just like this other one, we have an increase in supplies. So the left side, $120. And those were bought on account. So that means that's an account that has to be paid for when the business gets a bill. So that's an accounts payable. So accounts payable, Supply Depot, and the amount that's owed to Supply Depot increased by $120. So that increase in a liability goes on the right side, $120. Now let's get to our next transaction. Paid cash for insurance, $250. Once again, 2 accounts. Prepaid insurance. The insurance is always paid in advance. So that insurance is an asset. So just like supplies and cash, the increase is going to go on the left side. Then we paid the company paid cash. So a decrease in the cash account goes down. So the decrease goes on the right side under credit. And the last one we have, paid cash on account to Supply Depot. So it accounts payable, Supply Depot. So that's a liability. So now the amount that is owed to Supply Depot is going to decrease because money is getting paid towards that account. Think of it like paying down on a credit card bill. So that decrease in that amount is going to go on the left side. It's $80. And the other account that was affected was cash because a check was written. So a cash was paid out. So that cash decreases. The decreases on an asset goes on the right side, on the credit side. So there's the 2-2 work together.